Hey everyone, welcome back to the channel. If you're new here, my name's Paula. On this channel, we break down what's really happening in crypto, not just the headlines, but how everything connects so you can actually understand where the market is heading. Now, today I want to talk about something that feels quite confusing at the moment because if you've been watching the market over the last few days, nothing really seems to make sense on the surface. You've got headlines saying that over $1.4 billion has just flowed into crypto investment products, which sounds incredibly bullish. You've got the fear and greed index climbing out of the extreme fear for the first time in weeks, which suggests that sentiment is improving. And at the same time, Bitcoin is pushing back towards the mid 70,000 range. But then, right alongside that, you've got another set of headlines saying that this rally might actually be a trap, that whales are selling into strength, that the move doesn't yet look like a confirmed breakout, and that despite everything, the market is still stuck in a range. So the question is, which one is it? Are we seeing the start of something bigger? Or are we being pulled into a move that hasn't fully developed yet? Because when you dig into this properly, what you realise is that all of these headlines are actually describing the same thing, just from different angles. What's really happening right now is that money is flowing back into the market, but conviction hasn't returned yet. And that is a very important distinction. Because according to the latest data, crypto investment products pulled in around $1.4 billion in fresh inflows last week. That's one of the strongest weekly inflows we've seen in months. And it follows on from previous weeks as well, meaning this isn't just a one off spike. This is sustained capital starting to come back in. At the same time, total assets under management have climbed back towards $155 billion, recovering from lows closer to 128 billion just a few weeks earlier. So structurally, there is money returning to the system. But here is where it gets interesting. That money isn't flowing evenly. The majority of it is going into Bitcoin and Ethereum, while other assets, including some altcoins, are either seeing very small inflows or even outflows. XRP, for example, has seen negative flows in recent data, which tells you that even though money is coming back into crypto, it's being very selective. And that's a key signal because in strong, confident markets, liquidity spreads. In uncertain markets, liquidity concentrates. And right now, it's concentrating. Now, when you combine that with what's happening on chain, you start to see the second layer of this story. Because while long term holders and institutional players appear to be accumulating, there's also evidence that shorter term traders and some large players are selling into strength. And that's exactly what creates this kind of price action where the market moves up but struggles to break out cleanly. It's being supported from below but capped from above, which is why Bitcoin keeps pushing higher and then pulling back. And then we bring in the third layer, which is macro. Because a big part of what's driving this shift in sentiment right now isn't actually coming from inside crypto, it's coming from outside it. There's increasing talks around potential US Iran negotiations, with reports suggesting that Iran may be open to further talks and that diplomatic channels are still active. At the same time, there are still tensions with threats, uncertainty, and ongoing geopolitical risk. And markets are reacting to both sides of that. When the narrative leans towards peace, risk assets like crypto move up. When it leans towards conflict, they pull back. And what you end up with is exactly what we're seeing right now, a market that isn't trending cleanly in one direction, but instead moving within a range. And that is why Bitcoin right now is effectively stuck. It's not weak enough to break down because there is real money coming in. But it's not strong enough to break out because that money isn't fully committed yet. So, what phase are we actually in? We're in a transition phase. This is the phase where liquidity returns before conviction does. It's the phase where the market starts to recover structurally, but sentiment hasn't fully aligned yet. And historically, this is one of the most difficult phases to trade because it creates mixed signals. You'll get bullish news and bearish news at the same time. You'll get inflows alongside selling pressure. You'll get breakouts that fail and pullbacks that get bought. And if you don't understand that, it can feel like the market is just random, but it's not random, it's building. And the key thing to watch from here is whether this liquidity turns into conviction. Because if it does, you'll start to see clearer trends. Bitcoin will break out of this range, altcoins will begin to follow, and narratives will start to form. But if it doesn't, this range could continue. And we could see more of these moves getting sold into before any real trend develops. So when you look at the market right now, don't just ask whether it's bullish or bearish, ask whether it's certain. Because right now, the answer is no. And that's what defines this phase. Now, I'd really love to hear what you think. Do you think this is the start of something bigger, or do you think that this is just another move that gets sold into? Drop your thoughts in the comments below. And as always, at the end of this video, I will link the UK Crypto Podcast. I co host it with Milkshake Matty, and new episodes drop every Friday, 7 pm UK time, right here on YouTube. They're also available to watch on Spotify. And if you want to know the exact strategies we use in the Crypto Wolf Pack to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. If you enjoyed this video, make sure to like and subscribe. Thank you so much for watching, and I'll see you in the next one.